like national clothes, cultural day. Yeah, and we forgot to tell you. Yeah, so we see a fashion show in Shanghai will a bit, yeah. And so special thanks to Vitalik. Thank you so much to come here. As we said, everyone is so happy, and there's lots of questions posted, and we selected a few on the list. And if you want to ask more questions, you don't need to add to the list anymore because everyone is already here. So probably can ask afterwards and just directly. And so, yeah, I'll just let's happy time begin.
Okay, great, thank you. By the way, were there the other questions at the beginning, or are we just going straight into this?
I think we can just go diving into the questions.
Into these, okay.
Yeah.
Yeah, okay. Given many companies start out on ETH, once they reach a certain size, they create their own L1 or L2. Does that validate the app chain thesis? What's the point of building a chain? Yeah, okay. So I think my view on this general topic is that I think there's some applications for which app chains make sense, and there's some applications for which app chains don't make sense. I think making an independent L1 is something that is fundamentally hard, right? Like if you make an independent L1, you have to have a decentralized validator set, you have to have a big community, you have to convince people that this decentralized validator set can be trusted, and you have to worry about bridges, you have to worry about a lot of things, right? And I think at the beginning, from the beginning, Ethereum's entire pitch was basically that, hey, you can make a new type of application by just writing a few lines of code, and then you just have an Ethereum smart contract, right? Like even when Ethereum was started, there were things like BitShares. Actually, BitShares at the time was basically an app chain framework, right? Like in our modern language, that probably is what you would call it. And it just is much more convenient, right? Just create a smart contract and then just put it on Ethereum. I think the type of app chain that I think actually makes sense is a layer 2 on Ethereum. And what I mean here is the type of L2 that I think is less interesting is when you make something that basically tries to be as decentralized as an L1, and then also you just add some kind of attachments to Ethereum, you put blobs on Ethereum and so on, right? And the reason why I think this doesn't make sense is that I think you're basically paying most of the cost of being your own L1, but then at the same time you're still being an L2, and you're paying the cost of that, right? And so I think the thing that makes more sense is L2s that are much more minimalistic, right? Where one approach to this is Justin's based rollup approach, where basically anyone can submit a block and then you just use the Ethereum L1 directly for ordering. And the other approach is the server sequencer approach, right? Where you basically just have a server, and then the server publishes roots, and it publishes proofs along with the roots, and you basically still have essentially the same efficiency that you would have as a server, except you also are giving your users these guarantees that they have these proofs, and so if something goes wrong, then they can always take their money out, right? So that's the approach that I think makes sense for a lot of these cases.
I think I can read the question.
Oh yeah, that's probably better, yeah.
So the first question is from James. Do you want to say hello and stand up?
Yeah. Hello. Yeah.
Yeah. And the second question is from Alan Robinson. Do you want to stand up and say hello? And so he's asking, given the current pace of quantum computing research, how close do you think we are to needing a full transaction and to post-quantum cryptography in Ethereum? And which migration strategy are most realistic? For example, the hybrid scheme or the phased rollouts?
Yes, okay, very important topic. So I would break up Ethereum's currently quantum vulnerable pieces into, I think, about 4 parts, right? So one of them is on-chain user accounts. So like this is EOAs. The second is consensus layer signatures, right? So if you're a validator, then you're making BLS signatures. Then the third is blobs, where blobs use KZG for the data availability. And I think a fourth is Ethereum privacy protocols on-chain use ZK snarks, which are based on elliptic curves. And so those are also quantum vulnerable, right? So I think like those are basically the 4 right now, right? And there's like a 5th one, which is like randomness, but that's like relatively easier to replace. So we can basically go through these one by one, and we can figure out replacements, right? I think I would start with the 1st and the 4th because they're application layer, right? So the thing that Ethereum needs to do is basically full on-chain account abstraction, right? Where right now we have things like 7702, but those things, they still fundamentally rely on the idea of an EOA that has ECDSA signatures, right? And so with 7701, we basically allow EOAs to have arbitrary code. And then each user will be able to upgrade to a quantum proof account on their own time, right? Now, there is also this kind of more radical emergency idea, like where basically, if quantum computers came out literally tomorrow, what would we do, right? And the idea here, like in that case, like a lot of people would lose money, right? And like that's unavoidable. But the thing that we can do is we can basically do a hard fork that, like we take advantage of the fact that most people's Ethereum addresses come from seed phrases. And what we do is we basically replace the elliptic curve signature with a ZK Stark proof of having the seed phrase, right? And so like you basically prove, you say, I have this proof that says I know a seed phrase and I know a derivation path so that eventually leads to this address, right? And the reason why you can do this is because to go from a seed phrase to an address, like that requires going through hashes, right? And quantum computers cannot break hashes. So that's user accounts. For the blobs, basically, I mean, the thing that we would have to switch to is we would have to switch to erasure coding over, like Starks over erasure coding a Merkle tree. And we know how to do this. It has some disadvantages, like it makes distributed block building harder, but it's something that at some point, like we would just have to do, right? And like we know what to do. For signatures and for signatures, or specifically like signatures at the consensus layer, basically we would have to switch to a quantum resistant type of signature, like hash-based signatures. And I mean, we have like Justin Drake, he's been working on all of this, right? So actually, if people are interested in the quantum resistance topic, I would highly encourage people follow Justin Drake. He has he's doing the Lean Ethereum effort. So if you go to leanroadmap.org, then like you can find there's like sections that talk about all of this. And so there is already some very advanced initiatives that optimizing hash-based signatures. So I think in general, we know what we need to do. Like I'm pretty confident that we can get all this on-chain within 5 years. And like if we have to get it out even faster, then I think we know what we would need to do even faster.
Okay, thank you. Are you satisfied?
Yeah, I'm satisfied. Yeah.
Okay, so with the capital upgrade and future splurge phase, where do you see the balance between performance, which is fast pause and verification speed, and quantum resistance when choosing new cryptography primitives?
I think at this point, for anything new that we need to do, basically from now going forward, anything new that we need to do has to be quantum resistant, right? And this is actually the reason why probably the biggest reason why we've stopped the Merkle tree proposal, and we've decided to like go straight to starked binary trees somewhat later, right? The argument is basically that if we add a new feature today that is not quantum resistant, we'll probably have to do another whole hard fork to replace it again in 3 years, right? And like that is just too much work for us to do. So I think at this point forward, like anything new just has to be quantum proof.
Okay, thank you. So since there are also some, since here is the founders workshop, there are also some general constraints.
Oh, okay.
Yeah.
Okay, now we're doing these. Perfect. Yeah, could I share how I got started on the Ethereum building journey? So actually, yeah, Audrey, could you go to my blog, Vitalik Ethelimo, and then Control F for the word prehistory? Just like do that. Yeah, basically, I mean, Ethereum was, so it's, the project started at the end of 2013, and at the time, so prehistory, P-R-E-H. At the time, I had been like going around the world, and I was basically a Bitcoin magazine author. No, Control F inside the, yeah. Oh. P-R-E-H. There we go, yeah, that one. Go down a little bit. Just, no. Oh, perfect, yeah, go down a bit. Yeah, maybe start here. Stop. Yeah, basically, yeah, so I had been like going around the world doing some, like as a Bitcoin magazine writer and just exploring like different projects in the Bitcoin community and writing articles about them. And eventually I came upon these projects. One of them was called Covered Coins, one of them was called Mastercoin. And they were both basically trying to take the Bitcoin concept and extend it in some way to be able to do like other types of applications. And Covered Coins was focused on one application, which is letting people issue their own assets, right? So the thing that we would today call RWAs, they were doing back then. Then Mastercoin was, I guess it was what we would call DeFi today, right? They were trying to create a protocol that was trying to support some larger number of features, right? And basically, yeah, it was what I called a Swiss Army knife protocol, where essentially they decided, we want to support 15 different applications, and for every application, they had a transaction type, right? And so the protocol could do more things, but it was still pretty limited in its functionality. And I briefly joined the team, and I started going through their protocol, and I started like basically finding places where I could like replace 3 of their features with one feature that's more general and that covers more use cases. And then after doing this a little bit, I eventually realized that like basically what makes sense is replacing their entire protocol with a general purpose programming language. So I suggested that to their team. This was actually my proposal from back then. And they said, well, this is an interesting idea, but it would be a while before we can get to it in our roadmap. And then I realized, like, hey, like, these people don't get it, right? And like, no, this is supposed to be a replacement for your entire roadmap. And I figured, okay, I'll just do it myself. So then I kept working on the white paper, and I switched it over to basically being a new independent protocol. Right, and so this was an early version of the Ethereum white paper, right? And I wrote this white paper. I emailed it out to about 15 of my friends, and then they emailed it out to some of their friends, and people started emailing in basically saying like, hey, this is a cool project and I want to participate, right? And so at the time, like, I did not even think of this as being something super big. Like, I was literally expecting that this would be something where actually the early version of it was not an independent blockchain. The early version of it was an L2 on top of this altcoin called Primecoin. And the reason why we did it is because we wanted to make it as simple as possible to develop. We wanted to do something where like I would be confident I could build the thing myself if I had to. And so I figured, okay, myself and a small team, we would work on this and we would get Ethereum out in 4 months, and then I would go back to university. Now, this of course did not happen, right? And basically what happened was in January, I had this opportunity to present this project at Bitcoin Miami. And there I, like basically the size of the attention and interest just like really surprised everyone. And then we realized like, hey, you know, we have to actually make this a serious project and actually do it well. And at the same time, it became obvious that there was just a lot of money that we would get, and there's a lot of very talented people who wanted to participate. And so we started building Ethereum as an independent chain. So then we also discovered there were a bunch of legal issues, and so we started working on a foundation in Switzerland. A big part of our team moved to Switzerland. We started doing a lot of all different kinds of work. Then about 6 months later, we did the Ether sale, where we basically sold a big portion of the initial ETH supply, and this was a way of paying for development. And you know, over time, the project just kind of kept growing. I think the most volatile part of the project's history was definitely the pre-launch part. And I mean, there were just a lot of different challenges. I think like the people challenges were the hardest, right? Like much harder than any of the technical challenges. I mean, there were people that had different visions about like the structure that people would take. You know, there were people who wanted Ethereum to be done by a profit-making company, where that company would like both build the protocol and then it would also do services on top of the protocol. The company would have shares, and you know, like the founders would have a lot of shares, and like people would make money that way. And like I ended up like just strongly rejecting that approach and basically saying like we should be a nonprofit foundation, and like actually some people ended up leaving over that. Then I mean, there were one of the other interesting things was also like figuring out the token allocation at the beginning, right? Well, this was something where like I think if you had started a project, like if you start a project now, then like you'll get 10 different VC firms that probably give you their own like fancy frameworks for how to do tokens, and they probably have like 54-page white papers on this, right? At the time, this did not exist at all. So actually, I have there's this chart that here. Let me just send it, and you can quickly also put it up. 1 second. There we go. That would show that one. Hi, Helma. Oh, okay. I see it. One multi-hop. Okay. Oh, another hop. Okay. Right. So this was this was a chart of I mean, like the initial like ETH token supply, and like one of the things that we ended up fighting for was actually making sure that the pre-mine, like the part that the foundation and the early contributors get, would not be too large, right? Because you know there were people in the founding team who like actually wanted a very big slice, and then the thing that we ended up doing, like I think. Like even by modern standards, pretty impressive. Basically, so the portion of the ETH supply that was allocated to like the foundation and to early developers, it was that tiny piece. It was about 10%, and then out of that, the early contributors about 7.5%, and that was like actually split between 100 different people. And then the way that it was split is we basically had a spreadsheet that showed during each month, like basically was each person full-time, half-time, or quarter-time during that month. And then for each month, we allocated a fixed number of coins. And then we just like split it based on who contributed during that month, right? And so, like, basically, people who joined earlier would obviously get more, and then the team was smaller. But then it was like a very wide split, right? And actually, yeah, one person ended up getting 9,000 ETH for translating the white paper to Chinese. So there were
Pretty big project.
yeah, I know it was a lot of like, basically a lot of different contributions, right? And I think like figuring out how to do token supply, like it was this experiment that I personally felt kind of proud of, because the challenge with Bitcoin is basically that there's like one sense in which Bitcoin is fair, which is that the algorithm doesn't like technically privilege one person over any other person. But there's also a sense in which it's very unfair, right? Because all Bitcoin issuance comes from mining, it basically means that only one type of contributor is rewarded, right? And so what that means is like core devs, for example, are not rewarded. And one of the consequences is that core dev in Bitcoin has to be done by private corporations. And so like you have all of this drama of, like who is capturing core development, right? And so I think there's this kind of balance, between like basically, yeah, like this, are the core developers kind of too strong or too weak, right? And in most of the ones that get launched these days, like basically like that portion is like 70 or 50%, right? And like there's basically a very closed group of like maybe 10 people, right, that get half the supply of a token. And then like that actually creates a lot of imbalance, and like that often ends up demotivating other people from participating, right? But then on the other side, you have like projects like Bitcoin, and then the problem with Bitcoin is like basically aside from mining, a lot of the really important work is just like either very easy to capture or difficult to do, right? So this is just one of those very early things that we're thinking about, right? And like one of the things that I really have been thinking about more is are there ways to do like these kinds of things that have more of the properties of block rewards, that are kind of more automated and like more open and inclusive systems, but that at the same time can reward like more different types of contribution, right? So the work that Devansh is doing for deep funding is like probably the most recent effort that we're doing to try to solve this kind of problem. I mean, though it definitely is challenging. Yeah, okay. Question? Mm-hmm.
I was about to ask, when you designed the the POS incentives, of course, everyone think that Bitcoin, agree with you, only reward one of the possible contribution. How about when you design the POS incentive, do you have mind like how to set it up other type of contributions?
Yes. Okay. So I think there is a difference between like one-time allocation and ongoing allocation, right? Because with one-time allocation, like you do it once, and then there's like a list of numbers in a spreadsheet, and then like that's it, right? The problem with ongoing allocation is that ongoing allocation is like a process that can be captured, right? Because basically, like with this initial ETH allocation, by the time people knew what the outcome was already decided, right? And so there was no way to try to like influence and attack it, right? But then if we tried to set up some complicated voting game by which we could choose like this is where 25% of the rewards go, then the problem is that there's lots of ways to attack these kinds of voting games, right? And so like we did not want to take on the extra risk of giving ourselves the responsibility of like figuring out a really secure game that's difficult to attack, for figuring out who deserves how many tokens for different types of contributions. But I do really admire the projects that try, right? So like Zcash, they have 20% of the reward going to devs, and in that case, it's like a very centralized process. Well, actually, no, it's not super centralized, but it's like off-chain, kind of informal. Like they basically have a hard fork every 4 years, and as part of that hard fork, they decide the new allocation. Then you have Ethereum L2s. So like Optimism has their own governance mechanism for this. Arbitrum has their own mechanism. So a lot of different mechanisms there. So people are trying different things. Like to me, the ideal like cryptocurrency definitely would be one that has like a very robust and decentralized and like attack resistant mechanism for rewarding many different kinds of contribution. I would not say the problem is like quite solved yet.
Okay, so the second question.
Is, looking back over the past decade, what moments or turning points stands out as especially important for you and for Ethereum?
I mean, I think one is obviously just starting the project, right? But I mean, I think what's interesting about starting the project is like my own experience really feels like I almost fell into it accidentally, right? Because I think a lot of people imagine like, oh, at some point I made this like very difficult and brave choice where I decided to drop out of school and go do Ethereum. And like actually there was never any one choice, right? So what happened was, so first, beginning of 2013, I was in college, and part-time I was doing Bitcoin Magazine, and also part-time I was doing some like bounties for some colored coins projects, right? And I was just like earning Bitcoin and like doing and just understanding the ecosystem better on the side that way. Then the University of Waterloo, it has this co-op program where basically what you can do is it's like you study for a term, you work for a term, you study for a term, you work for a term, and then like at the time you're done, you basically graduate with no debt and with a lot of work experience, right? It's like I think it's a good program and everyone should do it. So what happened was that the rules of the co-op program are that you can take any job anywhere as long as it's relevant to your job, right, or to your major, right? And so I decided like, hey, maybe I should work for a crypto company. And so the crypto company that was most naturally available was Ripple. And so I called up Jed McCaleb, and he actually said yes in 2 minutes. But then the problem was that there was like visas, right? Basically, in order to legally work in the US, I would have to go under a J1 visa. And one of the rules of the J1 visa is that the company needed to have existed for 1 year in order for me to be eligible. The company had only existed for 9 months. So they spent about 2 months trying to figure out different workarounds, different options, other visas, other providers, and eventually they gave up. Or no, I think eventually like I gave up actually. Like it was just obvious that they were stalling. And so then basically my co-op term turned into an off term. And I talked to Mihai Alicia, the founder of Bitcoin Magazine, and he suggested I come over to Spain and work with him on a Bitcoin e-commerce thing that he was starting, right? And so I did that instead. At this time, I still thought that, in September I would go back to university, right? Then sometime in like mid-July, I realized like, hey, this is actually interesting. It's important. Bitcoin's going through a really important moment. I should dedicate some more time to this. And so I decided, okay, well, I'll delay going back to university until like basically until the summer next year, right? And so I did that. Then I got into eventually started Ethereum, and when I started Ethereum, I figured, okay, well, it'll take me 4 months, and then still I'll go back to university in the summer next year. Then finally, like, okay, Ethereum got big enough, and then it's obvious, like, okay, wait, now I'm totally not going back, right? So then Ethereum itself, we did the crowd sale, and then that got like $18 million, which at the time was impressive because the only type of thing that existed at the time was like Kickstarter type things, right? And I think we became the second highest crowdfund in the world. The highest was this game called Star Citizen, which, I think it got up to $100 million. I'm not sure what happened to it. But then nowadays, obviously, like everyone gets like, like 100 million, a billion, whatever, and like the world is crazy, right? The challenges, and then Ethereum started, right? And then at the time, we still thought, well, maybe it'll take us about 2 years, we'll get to proof of stake, and then we'll finish, right? But then it ended up taking longer than we thought. And then also, just in time, just when we thought that the foundation was going to go bankrupt in 6 months, we fired about half the team, like things looked very tough. suddenly the ETH price started going up, and it went up from like $0.5 at first to $2 and then to $10. And then we're like, okay, wow, we can survive for like 4 years now, right? Then the DAO fork happened. And then when the DAO fork happened, basically, first the DAO happened. This was like this first big smart contract application that got a lot of attention. It got hacked. And then we decided to do the fork to recover the funds. And then that created, of course, the split between ETH and ETC. And then ETC went off in its own direction. And then a few months after that, there were the Shanghai DOS attacks. Basically, someone kept finding bugs in the protocol and attacking the network and made it unusable for about 45 days. And then things kept going. Eventually, we got to the point where we started properly working on proof of stake. Then all of the crazy DeFi stuff happens. Then the merge happened. Then more crazy stuff happened, right? So, I think what moments are turning points? Or to me, actually felt like a very really continuous process. I mean, I think if I had to label specific points, then obviously, the launch of Ethereum was the first one. The DAO fork was probably the second one. The merge was the third. I think probably this year as a fourth, and that one was a very complicated one. But I don't know, in general, it's a lot of bumps everywhere.
So are there any particular experiences, whether challenges or memorable highlights that have shaped the way that you think about voting? Any experiences or stories or things?
Yeah, I am thinking. I mean, I think the biggest lesson I've learned, right, is that by far the hardest problems are the people problems. The people problems are way harder than anything technical. And the toughest challenges that we had were basically situations where effectively, the different halves of the Ethereum team, foundation or community were at war with each other. And I had to step in and basically figure something out, right? So, if you look at the original Ethereum, 8 or 10 or whatever the number of co-founders is, and you look at who's involved now, right, there's basically no intersection, right? And, there are reasons why there's no intersection, right? And there's a lot of individual stories and a lot of turnover, a lot of changes of the guard that happen in different places. And I think those are always the hardest moments and the most challenging moments, and also the moments where you have to make some really big and really important decisions.
What kinds of difficult decisions do you encounter along the way?
Yeah.
And how did you approach them?
I mean, the most difficult decision always is firing people, right? Nothing else compares.
You have to fire a lot of people?
I mean, it's not the number, it's the individual situations, right? I mean, actually, if it was a lot of people, then there's a sense in which it would be easier because the decision would not be binary. It would be much more continuous and okay, you can always compromise and take middle paths, but often it's binary. It's one particular person, it looks like they're just not able to hold the confidence of the foundation, and then, or even a small number of people, and then you just have to replace them with another team, and then you have to pick a specific group of people as that other team, right? And
so when you think about applications, which areas seems to hold promising potential for meaningful real-world impact?
Yeah, so right now, I split Ethereum's applications into two big categories, right? So one of them is what I call low-risk DeFi, right? Basically, financial applications that are useful and that are relatively well established, that we relatively understand. You know, like, hey, you can take a stable coin, you can put it into Aave or Morpho, you can get 4%, and like that's actually better rates than a lot of people are able to get in TradFi, and you have like very good international payments and savings, often more stable than TradFi for many people. And you know, like things that we understand, things that are kind of boring, and like we understand how they're like medium valuable for a lot of people, though they're also you know, like not super world changing in you know, a very kind of like flashy way, but at the same time, you know, they can be very meaningful, right? Like it's you know, a world where a small number of banks have like a choke point over like who can use money, like is meaningfully very different from one where like money is much more open and free, right? But like they're not, it's not like a flashy difference that you see immediately. So that's one category. The other category is the more interesting and experimental stuff, right? So these are, I mean, ideas that I'm sure people have seen me be excited about, including decentralized social media, prediction markets, more like fully decentralized stablecoins, so things like RAI, ZK, ID, ENS, and like the list keeps going on, right? And I think these applications are super important, and I think the fact that Ethereum is an ecosystem that incubates all of these things is like a super important part of what makes Ethereum great and what makes Ethereum interesting for me. But at the same time, like those are not the things that are going to pay, you know, like billions of dollars in fees or lock up like $100 billion of Ether, right? And so I think like, you know, in the short term, it's good to like think about these as being like two separate buckets and like understand the value of both, but also, you know, like work on the two pretty separately. Although I do think that in the longer term, there are a lot of opportunities for convergence between the two, right? So, I mean, I could give one example. So start with prediction markets, right? Like today, prediction markets are kind of a fun game, and like, you know, you go on Polymarket and you see, hey, look, somebody is betting that there is a 4% chance the US government is going to announce aliens before the end of the year. And so you're like, no, 4% chance is crazy. And so you go buy no tokens for 96 cents. And then 3 months later, you're going to have $1. And so you're earning a nice, clean, you know, like 12% APY, right? And like it's, you know, it's like fun to bet on aliens, right? And like that's what prediction markets are today. But then what can prediction markets be in the future? Like, I think the use case that could really bring them to higher levels of volume sustainably is hedging, right? Basically, if you are holding like a bunch of stocks, then one thing that's just rational for you to do is you know that stocks are correlated with some world events, right? Like there's political events, there's economic events, there's all kinds of events where you can just reliably expect that if that event happens, then your stocks are more likely to go up, right? And so if you have stocks, but you also care about reducing your risk, then one just very rational statistical hedging strategy is basically you hold the stock and you also bet no on all of the events that are correlated with the stock going up, right? And so you're like balancing out your risk. Now, for this to be viable, prediction markets have to be more liquid. Also, prediction markets have to like actually pay interest on the dollars, right? Because right now, like I'm betting no on the aliens, but then like that's raw USDC. I'm not collecting, you know, like the 4% interest, right? And so like I'm eating a lot of inefficiency there, right? And so like that's a hole that has to be fixed, right? Like you just need a lot more maturity, and then they actually become like a much more normal like financial tool at the same time as being this like really interesting you know, like thing that can give people information about the world that's like often more accurate than you know, either traditional media or social media. So that's like one example. Another example that's interesting in a very different way is under collateralized lending, right? Because like when people talk about the socially transformative potential of globally accessible lending, and like things like microfinance, they're not talking about loans that are collateralized by ETH, right? It's like, like the argument is like, oh, you can save, Kenya by letting entrepreneurs in Kenya start businesses, and then they get some capital, and then they're able to start selling things, and then make money, and then this is like lifting up the economy, right? But like, those founders in Kenya, they do not have piles of Ether that you can use to take out USD, right? And so, basically, the type of like quote lending that Aave does today is not the type of lending that people are excited about for financial inclusion reasons, right? Now, what do you need for the type of lending that gives you the financial inclusion is like, it has to be under collateralized, right? Like the entrepreneur in Kenya does not already have ETH, right? But what they do have potentially is, connections in their community, some kind of reputation, some kind of signal that would convince lenders to be willing to take a chance on them. And what's interesting about some of these, like ZK ID use cases is that what are they? What problem are they ultimately trying to solve? They're trying to solve the problem of basically saying, is this person an actor that I should trust for some particular purpose, right? And so today, we're using ZK IDs to do voting. We're using ZK IDs to, you can ZK prove that you have a passport to get a discount from DEF CON or DEF Connect. You can potentially ZK approve things to prove that you're eligible for membership in some community. But I think the intersection between that and finance is basically using these ZK proof mechanisms to prove things about yourself and to prove things about your life history that make people willing to lend you money without having collateral, right? And so I think this category is interesting because it shows, right, how this kind of boring finance and some of these more experimental Ethereum use cases, in the long term, they actually can merge, right? So those are just some of the ways in which I think, basically, to me, a low risk DeFi is sort of the economic center, but then, all of these other use cases, I think they're both valuable in themselves, and then they also, there continue to be more and more things where as they mature, they can enter the low risk category. And then potentially, Ethereum could expand and actually create a much more interesting and much more complete and powerful market in a lot of ways.
Yeah. So what reflection or advice might be useful for young builders or for founders who are just starting out the career, the journey?
I think choose carefully who you trust. Choose carefully who you accept as a co-founder. Choose carefully who you give percentages to. Basically, don't let yourself kind of get captured by one person.
Really don't trust people.
Don't trust money people. Honestly, people who are just geeks who are excited about doing cool things, they're not actually gonna hurt you. That's actually fine, right? It's Oh.
Yeah, it's really here to this country.
Yeah. So this is a question from Danielle.
Uh-huh.
Yeah. And do you want to say hello? Yeah, it's a related question. So myself and my co-founders decided to let go of our third co-founder who didn't shoulder efforts and responsibilities that share expected from a founder building an ambitious space infrastructure projects. I'm curious, when there was an increasingly complex atmosphere with Charles Hoskinson and other involved, what was the thought process and decision making that gives you the courage and foresight to push them out? And how did you resolve and settle matters with them?
Yeah. By the way, this whole thing is not going on the internet, right?
Yeah. We can mute it.
Okay. Yeah. Let's see. Something is not going on the internet, right? Okay. This whole thing is not going on the internet, right? Don't trust me, people, you know? Don't trust me.
Do you want to cover the camera to avoid lip reading?
Yeah.
Probably the camera off and the video.
Yeah, I mean, I think, basically, like, at some point what happens is that when a person, when a person's, like, position inside of the organization, like, just becomes untenable, like, from your conversations with other people, it just becomes more and more obvious that there is something that's very wrong, right? And often, the people who have a problem with a person, like, they often find each other, right? And they start talking to each other. And like, I think the important thing is to be able to talk to different people in the organization
So coming back, and we'll after our question and answer, we will have more time to chat,
No, thank you.
to dance,
Talk about like
and
yeah, right,
to
and like
dance with the
like
music
this
and to
meme
eat
and the
more.
like you do that actually micro podcasts and like
Okay, we are coming back, and yeah, you still can eat after that. Okay, you want to come back? So I think we'll give the computer to Vitalik, and you can choose. I think you can choose like
yeah.
browsing through, choose the questions and to pick the one that you want to answer.
Okay.
And then after that, I think we'll leave around
Yeah.
15 minutes free time for opening questions.
Perfect. Okay. Yeah, we'll
cool.
start with these. It feels like the only things in crypto that have gotten PMF are glorified gambling and trading infra, and now stabling payments that are centralized. Have you been disappointed with progress? I think, so, I mean, the honest answer, okay. So, the honest answer so far is yes, but I mean, I also think things are more subtle, right? So this is actually the topic that I wrote my recent blog post on low risk DeFi about, right? Where one of the arguments that I made is basically that like there were two big reasons why, especially during the like maybe 2020 to 2024 period, the only applications that succeeded were like the totally crazy ones. And one of them is regulation, right? Like basically, like Gary Gensler literally created an environment where if you try to make like an honest investment, then you just get branded as security. But if you make some totally useless digital monkey thing, then you're completely in the clear. And so he managed to make an environment where regulation like actually pushes you to make useless things instead of making useful things, right? And so now Gary Gensler is gone. So that was one issue. The other issue is that during that time, the level of security and the level of trust in the infrastructure was not that strong yet, right? So in my post, I had a chart that shows like basically percent of money in DeFi that was lost every year to hacks, right? And in 2019, in the first year, it was about 5%, and then it was 1%, and now it's like less than 0.1%. And basically, if the infrastructure, like you're not going to go in, like, okay, basically an honest financial application is going to give you realistic returns. Realistic returns means like 4 to 6%, right? But you're not going to put money into something that gives you 4 to 6% if you have a 4% chance of getting minus 100%, right? And so while the infrastructure was unstable, I think the only type of application that even was interesting are the crazy digital monkey sales, because if you buy a digital monkey, there's like some chance you get plus 50,000%, right? Now, I mean, obviously, yeah, most people lose money, right? But it's like the loud people win money, and then because they win money, that helps them be even louder, and so, you know, it's like the usual thing, right? So now the infrastructure is more stable and the regulatory environment is better, and so I think both of the old problems are gone. And so now, like these more low risk and these like relatively more sane applications, I think actually have more of a chance. And so now actually the biggest challenge, I think, is the second problem that was mentioned here, which is these like centralized US dollar based stablecoins. And the challenge is like US dollars are just like a thing that people are used to. And so there's a UX hurdle in people accepting anything else. And you know, we can't make that problem go away. We can do things to try to reduce it, right? Like we can do things to try to make it possible to like, for example, have a wallet where if someone asks you for $1,000, but then you only have euros, then you can still send them the payment, and then it just like does the trade on an exchange in real time, right? These are examples of things that like we're working on. Basically, yeah, I do think that we need to actively support decentralized stablecoins and local currency stablecoins, and like I know of a lot of initiatives that are doing that, but like it is a thing that requires time and it requires support. But like I actually think the picture is definitely more optimistic there than it was 2 years or even 1 year ago.
You can scroll down.
Oh, perfect.
And
Okay.
to pick
Okay. Well, I think this is good. In the realm of DID and VC, there is a fundamental need for credible roots of trust. How do you envision a model for issuing verifiable credentials that balances the need for a high assurance root of trust with the decentralized and censorship-resistant ethos? So, actually, this is another one where I wrote an article on this again about 2 months ago. For this one, I forget the name. I think it's like something about like why ZK wrapped identity is not sufficient or something like that. And the arguments that I made is basically that the type of identity that will come by default because it's convenient, but that is dangerous is identity that, oh, there we go, 28, does digital ID have risks, that one. So the argument that I made is like the type of identity that's more risky is the type of identity where you put too much trust into any one single issuer, right? And I argue that actually ZK Passport and WorldCoin like basically have exactly the same problem in that regard, right? And the problem is basically if you over-centralize on one issuer, that's where that one issuer is the only like reason why you say, you know, like this account is trusted, this account is not trusted, then like there's a lot of risks, there's a lot of power concentration, there's a lot of downsides on privacy and so on. And so the thing that I advocate instead is like plural identity. And plural identity basically means you don't over-rely on one issuer, you have multiple ways of verifying yourself, right? So like you can verify yourself with a passport, you can verify yourself biometrically, you can verify yourself with like 5 attestations from 5 other people, you can verify yourself with like a history of your activity and like signatures from, you know, like universities or employers. So like you have many different ways to establish that, you know, you are a real person and that you're a person who you know, like satisfies some conditions to be eligible for some application. And like I mean, in this post, they argue that there's a lot of reasons why it's healthier to do things this way, but the challenge is that pluralistic identity is like more difficult to figure out from a UX perspective, and so I'm basically encouraging builders to say, like, actually approach this problem and try to see if you can make pluralistic identity actually have a good user experience. Do I think Ethereum is prepared for a future where I step back completely from the, and is that a goal I have? I mean,
Cindy, who is Cindy?
oh
Yay,
no.
And who is Chris? Yay.
That was the one before.
Yeah, okay, so I think, is it prepared for a future? I mean, I feel like at this point, you know, if I disappear, Ethereum will absolutely be fine. I think that's actually been true for a couple of years already. I think, I mean, probably like if I were to completely disappear today, I mean, the risk that I personally kind of fear most is not Ethereum failing, but Ethereum, you know, like the direction of protocol research. I mean, like being unbalanced, like say, getting into corporate capture too easily is probably one of the big risks, right? Like we have, you know, there's a lot of people, especially this year, that have this kind of business pragmatist mindset that, you know, Ethereum should be like reorient itself and like design around its biggest users and applications, by which I mean like often they mean like New York centered finance. And like I actually think you know, we really need a counterweight to that kind of mentality. And I think I mean like that's a big part of you know, like the role that I'm trying to play. But I think like even that, right, is something that cannot depend on me personally, right? And so like always you know, like a lot of the things that I've been doing this year actually are not doing things directly, but they're about like setting up teams and empowering people and putting people into positions where they can serve a lot of these kinds of roles more autonomously going forward, right? So, you know, like definitely, yeah, like I feel like I've been trying to like work my way out of a job and then keep identifying like what is the job I haven't worked my way out of yet, and like find some way to make sure that that also doesn't depend on me. But I mean, in general, like I think it's more stable now than 6 months ago, and much more stable than even than 3 years ago. So I'm also optimistic. Oh, Coco.
Yeah, who's Coco?
Oh, there you go. Yeah. A zoo pop-up organizer, you want to understand what business models you're thinking about in terms of making the pop-up city sustainable. So one of the things that I've been, I think, saying for the past while is like, I think we need a shift from like these temporary 42-day pop-ups to more permanent nodes. And the reason why I've been saying this is that 42-day pop-ups are ultimately expensive in terms of money and in terms of time, right? In terms of money, because like short-term rental always costs more per day than long-term rental. And in terms of time, because like as an organizer, you have to figure out the venue, you have to negotiate with people, then you have to trade off between doing your due diligence and being ripped off by people. You have to like move a lot of physical infrastructure in place. You have to do a lot of things to customize the venue. And so like you end up basically having a lot of trade-offs between doing something that's like very bland and like basically a hotel with a few extra paper decorations versus like doing something really interesting but just like being completely dead of overwork at the end, right? And so if you have a permanent node, then the cost goes down in money and the cost goes down in time, right? And like basically any modification that you make is a modification that stays there permanently. So that's kind of the value, right? But then with a permanent node, the challenge is like, even though the long-term cost is more favorable, like you do need upfront money. You need to like either buy the venue or rent the venue for a long time. And that has a lot more of a stronger need in terms of governance, right? Because if you're doing a 42-day pop-up, then like basically the governance model that I think we've like it's become obvious that like works well enough is basically like dictatorship plus forking, right? You know, a pop-up is run by a dictator or a small founding team, and then if people don't like it, they just like leave and then they start their own fork, right? And like we've seen lots of forks happen in Zooland, and like actually it's like a pretty good mechanism, right? Like I think like what makes a good mechanism is basically, one where like the game that people are playing is a game where if you win that game, you're also doing something that's more useful for the ecosystem, right? And in that case, like it's basically the game is the free market. You're making something that people wants to stay inside, right? But the challenge is that if you're making a permanent node, then you're asking people to like put in a lot more resources to dedicate their money or to even to dedicate their time by moving there permanently. And so the cost of people leaving if the thing goes wrong is higher. And so you have to worry about governance more. Also, another thing is then if you need to have a lot of money up front, then like that money up front, like it has to be backed by something, right? And I think there's two realistic options. One of them is the real estate model. One of them is the startup model, like the startup incubator model. And the real estate model is, in the traditional world, it's very standard, right? It's basically you buy up a piece of land and then you put infrastructure and then the value of the land goes up and then people profit, right? And I think that is something that you can do. I think one of the challenges of that model is that it does give you some perverse incentive because it gives you the incentive to make the venue like more exclusive than it has to be. Like basically, existing residents would not want there to be space for new residents because that way the value of the land goes up, right? And like you don't want that. And then the other thing is like, real estate, the incentive becomes aligned with just like the attractiveness of your pop-up or of your node in a very abstract space, and like especially to kind of undifferentiated rich people. And so that doesn't really create an incentive to be like culturally interesting in a unique way, right? So those are some of the weaknesses, but then also it's just like a tried and tested model, and like it has a lot of upsides. The other model is the startup incubator model, right? Where you basically say, one of the approaches is that you encourage people to start entire companies inside of your node. And then you could even have, like, I think to be culturally interesting, you like you should have rules about what those projects are. Like maybe you require them to be open source. Maybe you require them to have a theme that's compatible with the general cultural theme of your pop-up. You require them to be pro-social in some way. And then you also take some percentage, right? And then that percentage, then if the company has succeeded, like that, it goes up in value, and then that is the return to the initial investors, right? And I think that's like, I mean, like I've seen a couple of projects that are trying to do something like that, and like that also feels like a very valid model to me. So I think like a balance of those two is good. Like I would love to see there being different permanent nodes that like basically try some combination of them, and like we should try 4 or 5 different things in that space. Also, it would be nice to figure out, you know, like are there good models for tokenizing this? And then also, if you tokenize, the other thing is like I think you probably want like multiple dimensions of a token, right? Like I think like you probably want to separate investment from citizenship, because like investment is something that's fungible and like you can buy and you can sell, right? But then citizenship is basically, is this person a member of the community? And that's something where like, for example, you know, you would want to give citizens governance rights, right? And then if you want to ask the question, who would you trust to govern a community? Like someone who's put in their time and who's like, who's well connected to other people in that community and multiple layers, is someone you would trust more than someone who just like plops in $500,000, right? And so I think like you do want to treat those two things separately as well. So no, I mean, I think there's like a lot of different variables to think about. Right now, I would just like love to see, you know, like 5 or 10 permanent nodes try different approaches, and then we get to see what succeeds.
What do you think the best like permanent node is right now, like in practice?
I mean, right now it's like pretty early, right? So, I mean, you know, like we've seen, I mean, obviously there's Frontier Tower in SF, which is like, I mean, I feel like it has product market fit, but then on the other, it's like product market fit, and that's great, but it's also kind of limited in ambition in other ways, right? Because to me, a big part of the ambition is like we should be trying to compete with San Francisco and New York and Beijing. Like we should be trying to redistribute, you know, like, you know, the global centers of technological power, and like help more of the world be part of things, right? And I think helping the center become even more of a center is like not my own vision in that regard. But at the same time, like Frontier Tower does manage to attract people in different spaces, and you know, people in biotech and people in you know, and doing Ethereum projects and people doing AI, and like create this community that's like actually focused on like a couple of aligned themes, instead of like just being sort of generic any kind of tech startup. Then, I mean, in Argentina, like Crecimiento feels like it's kind of growing, though. I mean, the level of ambition there is also like it's like, at least last year, it felt like sort of mostly a co-working space, right? And I mean, it did have like some particular themes, right? But also, it's like I think you can go much further in terms of like differentiating yourself, you know, like from existing co-working spaces. Then some of the more radical stuff that I see, I mean, in Switzerland, you know, there is Switzerland, and then also, you know, there is I think one other one starting off, and I think like more the western part of Switzerland. And I mean, like the Switzerland people seem to be like really taking seriously a lot of these questions of like designing the economics and designing a community, and like actually being more differentiated, and at the same time like actually being a thing where people would want to stay. And then the other one, it's like relatively newer. I'm sure they'll like say more things soon. And then I mean, in Chiang Mai last year, there was I mean, obviously 4 Cs, and then you know, the node inside the city and the node outside the city. So I think things are like still relatively early stage, though I hope that you know, that like over the next couple of years, like things will evolve more? I mean, I expect they will, right? Because I think like anything genuinely interesting takes time, right? And like the things that take the least time are always, like relatively the most cookie cutter. So I'm looking forward to seeing.
Do you think crypto makes a difference? Because pop-up cities are not, I don't think it's actually completely new in history, right? There were people trying small communities in history.
Yeah.
And then there were like Olympics is kind of like a pop-up city. And YC is a pop-up city. Do you think crypto can enable pop-up city different from the history?
Yeah, I think probably two answers. One answer is that probably crypto opens up new possibilities in terms of running the economics and like possibly aspects of the governance of one of them, right? Like you could imagine, like different pop-up cities that have like different currencies or like forms of membership that become interoperable with each other in some way, and then like running that on chain. Also being able to more efficiently attract outside capital is interesting, right? So that's one part of the answer. The other part of the answer is that crypto is a subject area that's interesting to people all around the world, that is naturally very geo-distributed. And also I think it's an area where a lot of the people who come into crypto, they come in because they have many kinds of bigger visions, right? And so, you see, especially like a lot of the people that have been in the crypto space for a long time are also people that are interested in like often very similar types of other things, right? And so like basically giving that type of community the ability to sort of go deeper and go more full stack is interesting, right? But then that's just saying crypto is a community. There's definitely other types of communities that are also very valid in the same way. Okay, hazardcrypto.eth. My perspective on liquidity fragmentation brought about by L2s.
So, Hazard Crypto, say hello.
Welcome. Yeah, so L2 interoperability is something that we've been working a lot this year, and so there's going to be some interesting things that we release at DEF CON. I think the way that I generally view this space, right, is that like what we want is an ecosystem where you have the benefits of people doing their own thing, and then at the same time the benefits of interoperability and standardization and the benefits of sharing liquidity, right? Like you want something that is both better than every L2 being a smart contract and better than every L2 being an independent server or even, an independent Cosmos-like chain or something similar. And and so I think right now the situation is very suboptimal in a lot of ways, right? I think the biggest pain points that I would feel right now, one of them is just raw UX, right? It's just difficult for a user to move coins between Optimism and Arbitrum or between Scroll and L1 or wherever. Two is the 1 week withdrawal window, right? Basically that it takes a week to move coins from an optimistic rollup down to L1 because that's the fraud proof window. And then for both of those, basically, we have some wallet initiatives to try to make moving between different L2s more automatic. And then for the second one, early in the year, I published a post basically suggesting a 2 of 3 design by which L2 finality can go down to being 1 hour and then go down to being 12 seconds. And once you do that, then effectively, you'll be able to do all of these, moving between L2s and L1 and L2 much more cheaply, either through liquidity providers that will be able to charge much less, or even just by making the moves directly. And so with those things, the problem will be, I think, simpler. And then I think once you go past that, the next big question is a lot of people get excited specifically about synchronous composability, about the ability to make one block within which you have transactions that bounce back and forth between L1 and L2. And there's always this open question of basically, how important is this actually, right? And I think like there's a lot of people who think it's very important. There's people who think it's less important. And so I think it's worth experimenting. Like I think it's valuable to try to figure out an L2 design by which you can make L2 blocks that are simultaneously L1 blocks. And then you'll be able to make individual transactions where activity inside of an L2 would be able to share liquidity with pools that are on the L1. And so, yeah, I think like building out those that piece is like something that I think would be really worth doing, right? So like step one is basically just massively reducing friction of moving between L1 and L2s, and then step two is doing things like that.
Okay, I think we can don't need to read on the script anymore, and everyone on the stage, and not stage, everyone here can just raise their hand and answer questions.
Yeah.
So we can pick.
Okay, back there.
Hi, I'm Rashmi, and if we consider transactions as building blocks of economies, what would be the best approach to calculate something like GDP or Ethereum ecosystem or Ethereum economy? I tried one of the approach in hackathon project, which was like, if you convert invoices and bills to NFTs and then track them, it would be where we could like categorize them and then do
Yeah.
things. Or maybe projects like Etherscan are best positioned to do that. I was curious to know your thoughts.
Yeah, this is a challenging one, right? Because like I think it's challenging for a couple of reasons. One of them is that if you create a metric, then as soon as people start caring about the metric, often it becomes very easy to spoof it, right? And so like we've had metrics before, for example, for comparing different applications and comparing different L2s. And like once those metrics start to matter, people do try to spam them, right? And like we've seen that happen in a lot of different occasions. I mean, even like TVL, like it's the sort of thing where TVL as a meme existing basically creates an incentive for people to like create more rewards and try to create try to attract more TVL into their application, even when it could function without the TVL, and even if it would be much safer if it has a lower TVL, right? And then the other challenge is that it's not just about like volume of activity, it's also about like what is the actual contribution of the blockchain world to that activity, right? So like one example would be like, imagine if theoretically, Jensen Huang were to sell NVIDIA entirely to Saudi Arabia, and this is like a $4 trillion transaction, and then that transaction were to just happen by bank, but then there would be a PDF of the legal contract, and then they would hash the PDF, and then Jensen himself would go and like make a click and then push that hash onto Ethereum, right? There's like a very naive sense in which Ethereum just processed $4 trillion and then we're bigger than almost every country in the world, right? But then at the same time, it's like, well, actually the value add that Ethereum is providing is like basically zero, right? And then on the other side, you have like something like ENS where an ENS domain is an asset where the asset's entire value and like its entire existence, it basically depends on Ethereum, right? And so you could say that Ethereum deserves like 100% credit for that activity, right? And then you have things in the middle, like if I send, like $10 million of USDC to donate to some charity, then like that's worth more than sending 10 million by bank wire and hashing it, but it's also worth less than like that 10 million asset dollars being an Ethereum native issued asset, right? So yeah, I think like if I were to start working on that problem, I would basically I'm gonna like start probably like come up with like 10 or 20 different examples of like different ways to use Ethereum in the context of some economic transaction, and then figuring out like what kind of weight they would deserve. Like, is that included, excluded, included with some multiplier, and then try to like figure out the index from there.
Any questions? Just raise hand.
Jen?
So what do you think about the act? Since I think for this year, the the tech industry is so dominated by AI, and also the job market is get impacted by the technology. And so how will DX go, and how we can get the right back?
I think this is like a very big picture question, right? Because AI is causing a lot of big changes to the world, and I think basically if we want the world to go well, then there are a bunch of other things that I think need to kind of proceed at least the same speed, because otherwise, like if AI goes forward and nothing else goes forward, then like a likely outcome is that eventually you get the most powerful AI by the most powerful company becomes super intelligent, and then the best case scenario is that it takes over the whole world, and then the worst case scenario is that it accidentally blows up the whole world, right? And yeah, so I think like the kinds of things that we would need to level up are, I mean, one is that like I think it would be better if we can like have less agentic use cases and more use cases that involve AI human interaction, and like continue that, and like basically push that work stream so that it progresses as fast as the purely agentic AI stuff, right? So like basically less, like one button click and then AI does everything for you, and more of like something where you continue to be involved in the design process of like whatever it is that you're making. And I think this is just something that seems like it's being relatively undersupplied by people relative to some of the more agentic stuff, which like I think is sad, because I think like that's like if we want us as people to continue to be involved and have a role in the economy, then like that other category is something that we actually need to build more of, right? So that would be one piece. Another piece is like basically, yeah, we can look at what are some of the near-term risks that AI creates, and then we can try to build technologies that try to solve for those risks, right? So like, for example, AI could hack into a lot of things and make it easier to hack into things. And so we need to quickly level up on cybersecurity. AI could create pandemics, and so we need to like level up on biosafety. AI AI is already breaking social media, and so we need to level up on like info defense and like basically giving people access to a much more high quality information about like what things are true and what things are false. And the solution there will have to involve AI itself, right? And so like actually working on all of those individual streams, right? And so that like it's basically this kind of distributed effort where I think a lot of different things have to happen, right? And then the other thing is just keeping things like privacy and security and openness in mind when we work on these technologies, right? Because like by default, the thing that Silicon Valley companies will create is like trust me solutions where basically everything goes into some super powerful server, and then in 10 years, you have brain-computer interfaces and Mark Zuckerberg is reading your mind, right? And we have to try to create alternatives to these things. And I think, the biggest challenge is like how to support and fund this kind of work. Like I think it's good that we're doing community building to try to like organize these projects better and to try to make them more aware of each other. I think figuring out how to actually fund it is something. I mean, there's a lot of different ideas, but I definitely think it's still one of these open problems.
Hi Vitalik, I am Jay. Imagine, let's say, tomorrow a new L1 emerges and it reaches global mass adoption, but through a different set of design choices, maybe through less decentralized. How would you feel, both as a founder and as a passionate blockchain enthusiast to this? Would you feel the need to see it as a competition and make some changes among your design as well, and how you see the vision for Ethereum, or you just continue building and let them do their work?
Yeah, I mean, I think a lot of things depend on the details, right? Because if something makes different trade-offs, that generally means that it's going to succeed in different markets, right? And so, like, I think we already see some examples of this, right? Like this year, we've seen a lot of these corporate L1s launching. And the thing with the corporate L1s is, like, my prediction is basically that they're going to be very successful within one single country, but then they're going to have a very hard time internationalizing themselves, right? Because if you have a centralized project, then that centralized project is inevitably going to have very successful BD within the ecosystem that that founding team happens to be very good in. And so often, like, that might be the US, sometimes it might be Europe, sometimes it might be China, sometimes it might be Japan. But actually getting international adoption is going to be hard, right? And because like even today, there's like a lot of resistance worldwide to like your country becoming dependent on a solution that's run out of the U.S. or even run out, or or run out of any single country, right? I mean, this is a concern even like within the U.S. as well, right? And so. But then on the other hand, if you are if you get together a bunch of big banks, then like yes, you get people to agree very quickly, and then you can like very quickly get to 200 million customers, right? And so, like I expect that those kinds of approaches will just succeed in different kinds of niches. And so in that case, like the answer is basically that I think Ethereum should just continue building its thing. The other place in which you can make different trade-offs is like actual improvements on algorithms, right? And like if there are improvements on algorithms that are able to like say create better scalability without worse decentralization, or like create faster block times without worse decentralization, then like I think that's something that Ethereum also should be studying and should be learning from. Yes.
So about, I think the human part of the what you have talked about is quite touching. So I will ask. As someone who has idealistic vision, how and starting up, how do you gather forces, people who are aligned to you, especially in a world that is can go crazy, and as you mentioned, the price can go up one day, tomorrow it's very down. So of course you write a lot. Is it writing a way for you to find people who are along the same path?
I guess looking back, it's definitely had that function. Like I think, I saw one of the other questions had to do with like the difference between Bitcoin being anonymous and Ethereum not being anonymous. And like I think had I tried to launch Ethereum anonymously, like I think it would have failed and gotten nowhere, right? And the reason why is like the beginning Ethereum community, they basically, they took it seriously because they already knew me from Bitcoin Magazine, right? Like I think that part was unavoidable, right? Like, I think getting your ideas out there and like making it legible to people, what kind of principles you stand for and why you stand for them. Like I think yes, like that is an excellent way of like filtering for and attracting like-minded people, and I think more people should do that.
Can I ask another one? So about more of stablecoin. So are you happy with the blockchain adoption for the global financial system yet? And with all the heated up discussion around stablecoin, what are the trends you would see?
Yeah, I personally would hope to see that we can get a more diversified stablecoin ecosystem. And to me, that includes like both local currency stablecoins, and it includes like more fully decentralized stablecoins. And even like, I think we should even experiment and like also explore moving beyond national fiat, right? Like we should explore, synthetic assets that track consumer price indices that are potentially even like targeted to like individual people or much smaller communities, right? And basically because the status quo of like everyone using USDC and USDT, like it's, I mean, it does have a lot of downsides in terms of, like in terms of systemic risk, in terms of like even, like risk to Ethereum of like what happens if something goes wrong in one of those ecosystems. And so if we can have like 10 other stablecoins that are as successful as USDC and USDT, that are more diversified and much more decentralized and much more resilient, like I think that would be much healthier for Ethereum. But I mean, it's obviously a challenge to be able to get there.
Any more questions?
Yeah.
When thinking about like the intersection of like AI and crypto, I think there must be like many unicorn companies that can be created in this intersection. But when you look at what's actually been built, like AI 16Z and virtuals, they're basically vaporware. Like, do you think there's any like real use cases or like companies that could be built like today in this kind of intersection?
Yeah. So I think one way that I think about this is that there was one AI crypto intersection use case that's been successfully running for over 10 years that nobody talks about, which is basically arbitrage and market making bots on decentralized exchanges. And like to me, that use case is interesting because it's like a very early member of what I consider this much larger category, right? Which is basically the blockchain defines the game and AI plays the game. And like I think we are going to see many more instances of that kind of form factor, but for games that are much more sophisticated, right? Like I think, like I expect we almost certainly have AIs playing on prediction markets today, right? And like that's much more sophisticated than being a market maker bot, right? Because if someone creates a new market and it's like, oh, there's like a 14% chance, Jesus Christ is going to appear this year, or like whatever people are saying, then to be able, like you have to like parse news articles, you have to like do sophisticated analyses, you have to do some pretty complicated things, right? And the ideal here is basically, can we create a market that basically creates an opportunity where people can like essentially like pay for a sophisticated judgment on some issue, right? And like I'm not sure that this is this needs to be a packaged product. Like it might be just an emergent property of like having more markets on more different types of issues and having like both transaction fees low enough and liquidity high enough and everything mature enough that it starts making sense to talk about these kinds of things. I mean, also the deep funding effort that I mentioned earlier, this is kind of my own attempt at doing this kind of thing, right? Where the goal is basically that it's trying to solve this problem of like, how do you make something that's the equivalent of a block reward, but for rewarding all types of activity? And there what happens is you have this like human judging mechanism that's able to make a small number of judgments of like basically how much credit does A deserve for B, and then you have like basically a prediction market that's trying to predict those answers across an entire graph of like many thousands of different projects. And then like the hope is that we start getting an ecosystem of these AIs that are able to make like reasonably good judgments at the cost of like a few cents of compute that are probably still going to be worse than human judgments, but they'll be like good enough to be useful for a lot of tasks, and then like that slowly improves from there, right? So like that's a category that I think is interesting. Another category that I think is interesting is like the future of wallets and browsers and all of that stuff like is going to inevitably involve AI, right? I personally don't believe at all in the whole like give $1 million to an agent thing, right? Like I think if you give $1 million to an agent, there's just so many of these like like hacks, backdoors, like Pliny the Liberator type of stuff, and like people are gonna grab the $1 million quickly, right? But the thing that I do believe in is like if you basically, if you think about the wallet security problem, right? Like the problem of, how do you protect people from accidentally doing the wrong thing with $1 million of their money? Then one thing that you don't want to do is you don't want to make it easy and like one click and like, oops, you made a typo and then $1 million goes to a hacker or disappears, right? The other thing you don't want to do is you don't want like the GDPR dystopia where you have to like make 5 clicks for everything and then and then eventually clicking just becomes a totally automated ritual and like it doesn't actually turn into a meaningful signal of anything, but then it just annoys everyone, right? And like we see wallets I think like earlier versions of Rabby were like this where you just had to like click many times and it just annoyed you, right? Like the thing that a wallet should be is that a wallet should make it easy for you to do the right thing and hard for you to do the wrong thing, right? And like if you try to do the wrong thing, like yes, it should have 5 are you sure click-throughs. And if you try to do something that's obviously correct, then like 1 click should be enough, right? But then figuring out that boundary is something that I think is going to involve a lot of AI, right? Like in general, the thing that I believe in is I believe in much more sophisticated consumer-side software that's not unilaterally doing things on doing high-value things on the user's behalf, but that is trying to assist the user in interpreting everything on the crazy and adversarial internet and trying to basically be a more sophisticated actor that can do at least some things in the user's interest. And the exact version of this that makes sense, I don't know yet what it looks like, but I think it is something that's worth trying, right? But yeah, I mean, basically, it is, to me, it is one of these situations where the version of the thing that's really long-term meaningful is just harder to do and takes more time, and the version of a thing that's really flashy and creates a fun story that goes viral on crypto Twitter is the easy thing to do.
Okay, I think we will have only one questions.
Yeah.
Being a very open person in the public, we've seen a lot of high-value targets that are being targeted in deepfakes and phishing, and even CZ from Binance CDR to get on Telegram, because we're seeing a lot of spamming. So I'm wondering, how do you protect yourself while also being accessible to the community, both online and also digital?
Yeah, okay, so one important thing there, this is, again, a blog post I wrote. If you Control F for security question.
Security question.
Yeah.
Is there one?
That one. Okay, scroll down. Just a little bit, scroll down, and then click on me shilling a dog coin. Let's just we're gonna have a bit of fun, and just let's watch a video. Click on me shilling a dog coin right there, yeah. Yeah, let's watch this. Turn up the audio.
Do I regret it? Well, I didn't. That is not until I heard about SHIB Exchange. SHIB Exchange is pretty revolutionary in the crypto space. Making Shiba Inu the quote token is just genius. If I still had all those Shiba Inu tokens, I know exactly where I would take them. Let's fucking go.
Yeah. So, okay, so this was a video deepfake from 1.5 years ago, right? So you know how much better things have gotten since then. And I'll go back to the arguments that I made is basically that audio and video are just not reliable ways of telling who is who anymore, right? And so the thing that is reliable is much stronger forms of authentication. And the post that I made here is in any kind of personal or organizational context, if someone tells you hey, send $20,000 over here, or sign this transaction from a multisig or anything like that, the thing that I think we need to very quickly turn into a big part of our culture is the concept of a security question, right? Basically, if you ask me, hey, will you sign this transaction for me? Then a thing that I can do is I can ask you something about about something that we did in person, like the last time that we saw each other, right? Like basically ask some fact that only that person would know, and that would not be discoverable, like even if you could hack the internet, right? And like that way you can actually tell, like, is this person actually the person I'm talking to, right? Because like there basically is no other way to tell at this point, right? Like style can be copied. If you hack someone's Telegram, you can probably like very quickly fine-tune an LLM, probably within 1 minute, that can imitate their style. Video, same thing. Audio, same thing, right? Shib, let's fucking go. The basic so. Like this is something that we need to be much better at, both inside the crypto space and outside it. Yes, and also like I think solving this whole like deepfake and scam problem, like it's going to be hard, and like it will require a bunch of different solutions stacked on top of each other. And like I think. Like basically, like a lot of individual people are not sophisticated enough to be able to tell like whether some message they're getting from this internet that's like coming up with new crazy stuff every year makes sense or doesn't make sense, right? And I think if we want to like solve this problem, but in a way that's still compatible with letting people access and get the benefits of the global internet and the global economy, then the solution is that we need some kind of sophisticated like software and like actor that's on the user's device and that is made by a separate actor that is actually incentive aligned to be in the user's interest, right? So like that has to be part of the solution, but the other part of the solution is like culture, right? And like if we can make security questions a much more mainstream part of the culture very quickly, then this is something that could have prevented like every incident that I mentioned here, and probably a lot of other incidents. So if you haven't asked a security question, then next time someone asks you for money or a signature over the internet, then please do.
Okay.
Yeah.
It's actually time is up, and do you mind if I take another one question?
Okay. Okay. Quickly.
Really last one question.
Okay. Last one. Quickly.
The really last one.
Yeah. Go ahead.
So I'm curious, if you are Vitalik from 12 years ago, and in this world trying to look for an internship, something interesting to work on, do you still take crypto industry, or you will have a second thought? And if you do, which sector you might probably go for? And of course, let's assume Ethereum still exists, but funded by someone else.
Yeah, I mean, I think a big part of my answer would be like anything in the 10 categories I've mentioned over the last hour or so, like consider just actually building it. This whole idea of like, can we figure out a new type of browser that like more actively protects the user from all kinds of things? Like basically, like Brave kind of was that 5 or 10 years ago, right? And like I think we need a newer and more sophisticated version of Brave that's like more aware of the newer problems and that's like much more AI first. Like you can go and like just try to do that. Or think about so like what I mentioned, like under collateralized lending with ZKID, like you can just go and try to do it, right? Like you can try to do a pluralistic ZKID solution and then have a couple of motivating use cases and like try to make it work. So there's just like a lot of different little ideas, and I think whichever one of them like personally excites you, I think like you should be willing to try. So that's like one piece, right? And then I think the other piece is just like the biggest, if you make something realistically, the other challenge that you get is like, how do you get the world to pay attention to you, right? Because like this is actually super hard, right? And like I think a lot of people don't appreciate how hard it is. Like I remember, like when I was a teenager, I made some I learned programming by making games for myself, and then eventually I like made a game that's like pretty complicated, and then I had no idea how to get like more than 2 users, right? Like the only thing I knew how to do was like tell my classmates about it, and that's it, right? And so that's like that's something that's challenging, and realistically, you either want to like find co-founders who are good at that kind of thing, or like get yourself into a community where there's other people who can help you. So that's something that's also just really important to keep in mind. Like, it is hard, but I think the tools that we have for just organizing and finding people are also better than they were 10 years ago, and so you can take advantage of that.
Okay, thank you.
Okay.
Thank you everyone as well, and thank you, Vitalik. And Chris, do you want to play the music? And by the way, as today is a cultural day, which means wear your national dress day, we also have a list of national musics. And so it's the list is in the group, and you can still add to them. So everyone can stay, hang out.